Welcome to our technical analysis for swing trading strategy series. My name is Eric. Be sure to visit our website at stockoptionassassin.com to get our free trade of the week video, and be sure to subscribe to this channel. In this episode, we're going to look at using currencies as a technical indicator. And first, we're going to take a look at the US dollar, and I'm using the ETF, the UUP, as my proxy for that. And I'm going to put a little arrow here. This is a very important day in American history. This is October 29th, 2014. This was the day the Fed came out and ended the quantitative easing, well, at least for now, right? And that's if they don't start it up again. But this was a very important day. And up until then, there was a lot of rumor that they were going to end quantitative easing on that day or on this announcement. But a few weeks before, there was a lot of talk about them possibly delaying ending it because the economy, there were still some weak spots and they weren't sure. So you can see the US dollar kind of softened up until the announcement. Once the announcement actually happened and they ended quantitative easing, all things started to align, and this sort of giant bull flag that the dollar put in, we started to sort of rally up. And what's more important here is that on our system, we have a buy signal where our oscillator starts ticking up and our DMI stochastic extreme starts ticking up from an oversold area. So we are on a buy signal for the US dollar on this day. Now, what we decided to do, our members and I, what we did was we were looking at gold, and basically gold and the dollar has kind of an inverse relationship. You can see that the dollar, or gold, I'm looking at the GLD, was declining during this time. And when the rumors came out that maybe they'll delay the ending of QE, the gold sort of firmed up a little bit. And here is when the announcement came out. And this is when we decided to go ahead and buy puts on GLD. Now, had I just been looking at the chart itself, this necessarily wouldn't have warranted a short trade because we were already at the lower band. Yes, the oscillator is moving lower, but this was already oversold. Typically, you'd want to wait until you get a better, kind of let the stars align, if you will. So what we did is we let the buy signal in the dollar, the currency breakout, dictate our entry for our short gold entry for buying puts. And the very next day, gold went a little bit lower. And then this was another important day, was after the 30th, the day before Halloween, Japan came out after hours and said they were going to print even more money. So let's take a quick look at the FXY. The FXY is the Japanese yen, a proxy for that. So you can see here was the 30th, and then after their announcement came out, the yen just tumbled, right? And this actually sent the dollar even higher. You can see this big gap up on the 31st there. So if we go back to the gold chart, we bought puts, remember, on the 29th on the ending of QE, and then 2 days later, we called it the Japanese bazooka, came out, the yen tumbled, gold tumbled, and the dollar rallied. So buying puts on the GLD, we held those for 2 days, and those puts yielded us 166% gain in just those 2 days. And so the point of this video is to kind of show you that if you're looking at currencies, you can use those as a technical indicator. So I'd love to hear your feedback about this video. So please comment at the bottom, give us a thumbs up if you found this helpful, and thank you. Have a great day.